feel like I should feel like I should feel like I should feel like I should go. Go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should.
GetCrack. Wake up, motherfucker.
And so at least for the quarter, it was a healthy beat here on EPS and revenue for Amazon. That EPS number coming in at $1.86. That was better than expected by almost 40 cents. Revenue of $187.79 billion. Stronger than expected. And then that AWS revenue number, that cloud sector, 19% growth. That was the number the street was looking for. So right in line there. We're going to keep digging through the numbers, though. We'll bring you more. You can see stock down more than 5%. So something's got to be going on here. We'll find out.
All right, Kate, we know you're getting back to work on that. We do also have Expedia results. We're going through those, too. In the meantime, Mike, I want to bring you into this conversation, your reaction to the beat we just got in the top and bottom lines for Amazon and the fact that cloud did come in as expected, 19% growth after we saw Alphabet fall short and Microsoft's results disappointing as well.
Yeah, I mean, I think it probably says a combination of the challenging setup in terms of the buy side having pretty big eyes for, let's say, revenue beats and what AWS was going to deliver, and then maybe a little something in the mix in terms of guidance, which I wanted to take a quick look at. But it has really been the favorite in the Internet group in terms of how the stock has performed, in terms of consensus on the sell side and the buy side. So let's see it settle out and you know, if this is just sort of the reflex reaction.
Okay, Barbara, you're a shareholder. Your clients are shareholders in Amazon. I realize we're looking for some more details here. What do you want to hear from this company?
Well, there are a number of things. I mean, obviously, the AWS is what's being closely watched because of Microsoft and Alphabet's miss there, because it's really been driving a lot of their growth and also the AI monetization. We want to know about the e-commerce margins, what's happened both in sales and in the margins there, particularly what's happening in their distribution and wholesale. They are really doing some big improvements in automation and robotics, so we want to hear what that's doing to margin. So I think there's a number of levers that we want to see, and it's surprising because they really beat on the EPS number, and so this sell-off, it may be short-lived, you know, because even their revenues were not dramatically higher, but they were higher. So it looks like very good numbers.
It looks like, if I'm reading this correctly, that Q1 sales are projected to be $151 to $155.5 billion, which is softer than consensus expectations right now. And Kate Rooney has more details on that and other things in this report. Kate.
Hey, Morgan, so the guidance here, at least for Q1, appears to be weighing on Amazon after hours. So Q1 revenue looking below consensus at the midpoint, $151 billion to $155.5. Street was at 158, so significantly lower. And then same with Q1 operating income. That's looking lower than expected, or at least where the street was. There is a note in here, guys, about foreign exchange. They say net sales are expected to be $151 billion, between 155, as I mentioned, growing between 5% and 9% compared with the first quarter. They say here the guidance does anticipate an unusually large unfavorable impact of approximately $2.1 billion from foreign exchange rates. And as a reminder, they say there was a leap year in the quarter. So there's a little bit of messiness on the comparisons, but that is likely what's causing that knee-jerk reaction.
Be a few things going on here. They did explain the leap year, but that's not enough. The miss is still higher. So it's either that retail has slowed down, which it very well could have after a very strong holiday, or they're just being conservative with everything that's going on with tariffs and so on in the marketplace today.
Yeah. It's kind of interesting, too, because the commentary, Andy Jassy in the press release talking about, kind of what a great holiday shopping season it was for them. And just even his first commentary, everything just seems very, very optimistic. So, I mean, what would be the question you'd want to ask Andy Jassy about this forecast?
Yeah, I think things are very, very strong in the fourth quarter. So why the slowdown in guidance? I get the leap year impact, but there's more to that here. So what are they seeing that we're not seeing? I think part of that will be tariffs, but aside from that, AWS should still be strong. So we're waiting to hear on the call what he has to say.
Oh, so the forecast has to do their concerns about tariff costs or impact?
It could, right? Because we do know that they're going to be impacted to some extent with the tariffs because they do have a large 3P business. 65% of their GMV, we estimate, is from 3P. And a lot of those sellers are China-linked sellers.
This operating income line item at the bottom line here, 14 to $18 billion. The estimate was for $18.24 billion. Where's that miss coming from?
That miss has to be, they must be anticipating, if we look at the guidance, right, and you look at AWS margins in the quarter, they had a very sharp beat. So the question is something going on in AWS for the margins to be guided lighter? Because as we know, AWS is the driving force behind Amazon's profitability. And when there's weaker guidance, that's usually where we lean into for more input.
It's so interesting. We look at these companies, they're so important, the Mag 7, right, in terms of what their businesses are telling us, because they're so important in terms of market momentum and market moves. How do you characterize this quarter right now for the company?
The quarter was exceptionally strong. The quarter was very, very good across all fronts. Retail was strong. AWS was strong. Advertising in line. Physical stores was even stronger. So a very good quarter on the top line and across the margin. But the guidance is light. So it's hard to connect the dots on why such a shift when we ended with such a strong quarter. And really, we're looking to hear that on the call. So number one question is why have things decelerated or why the conservatism in the guidance?
Would it bother you as someone who follows a company like this? Because Tim and I have certainly either on air or off air, talking to leaders, certainly heads of companies who are like, we're watching Washington and we kind of have to go day to day. We just don't quite know all of the policies that may come down that impact our particular industries. And it sometimes goes back and forth on a day basis. And this is, kind of what we're hearing. So they're taking it day by day. Could this just be Amazon being cautious?
Absolutely. I mean, if that is the answer that we hear on the call, then I would say that they're just exerting more caution and things should be better than what they're guiding to should the consumer continue to spend, because there's no other reason, unless they're seeing a deceleration, a sharp deceleration, 1Q to date, for them to offer weaker guidance.
Well, could things like tariffs and stuff, like you think about what it means for Temu and Shein, I mean, is that a plus for Amazon possibly?
It absolutely is. So there's a plus and minus here. So when you think about tariffs, the added tariffs, the 10% increase on goods from China, is a negative for all of retail, including Amazon, especially their first-party goods where they have direct ownership and exposure. But when it comes to the competitive playing field, by taking away the de minimis, now the playing ground is really leveled, and they don't have that extreme competitive threat that they had with Temu and Shein anymore. So that is a plus where they can now offer comparable prices and keep margins relatively constant with their competitors.
The strong dollar has been one surprising headwind for the mega caps and names like Uber as earnings come in. Deirdre Bosa takes a look at the impact that could have on Amazon tonight. Hi, Deirdre.
Hey, Kelly. So the Magnificent Seven, they generate, of course, substantial portions of their revenue overseas. So when the dollar strengthens, as it has, those foreign sales translate into fewer U.S. dollars when they report. And we've been seeing that certainly from Meta, Microsoft, and Google a few nights ago. It is likely to be a headwind again when Amazon reports tonight. But Forex headwinds, they will impact big tech to varying degrees. So we took a look. Here is where each of the Mag 7's international revenue exposure stands. and how it has changed really over the last year. As you can see, Apple and Meta, we're going to pull up this image for you. Apple and Meta are most exposed in terms of how much revenue they generate abroad, nearly 2/3 for both of them. NVIDIA is next with more than half its revenue derived internationally, but it has also seen the most change in that makeup. Last year, it increased its U.S. revenue exposure by 44% over 2023, thanks in large part to export controls and the hyperscalers' enormous ramp in CapEx. Now, Amazon actually has the least exposure, with just about 30% of sales coming in from abroad. Still, continued dollar strength that could significantly impact guidance like it did for Meta, Microsoft, and Google. And what may be different this time are elevated levels of trade uncertainty introduced by the new Trump administration. The USD, it's seen as a safe haven amid those tensions. And Kelly, maybe even perhaps more than dollar strength, sort of rising protectionism. We see that lawsuit or the probe in China into Apple's. I mean, when they're getting so much of their revenue abroad, this stuff is going to matter more and more.
Yeah, and it really has been. I'm glad you're highlighting it because it's been one of those factors that kind of can swing the stock and people didn't quite expect. Deirdre, thanks. Deirdre Bosa in Tech Check.
All righty. January 6th, 2025. And you heard it. That dollar is too strong, son. Too strong. So one of the things that will hurt earnings is dollar FX strength. And that affects a lot of the multinational companies, as I showed that last video, which was premiered before Amazon's earnings. And you see now Amazon is down about 4%. It was down at most 5%. It was like waffling at negative 7% too. So right now, $228.94 on Amazon. So that's been the story this week. Google, Microsoft, all same issues. The dollar is just too strong. So they can't grow as high as they can technically from an accounting standpoint. So I don't know if it's going to be ignored or what, but if the dollar continues to stay high, yeah, you're going to see a lot of repricing on share prices. Now, small caps usually don't have international business, so or very little, so they're going to have little effect. They're going to be more sensitive to bond yields. So you want bond yields to go down, you want the dollar to go down, and overall for inflation, you want to keep the oil prices at a low level. But I think we're at a bottom with oil, so I think oil is going to go back up. So even if the dollar pulls back, the bond yields pull back, you still got oil, which I think will rise once China stops their little deflationary issues here. So that's going to be a problem, right? And yes, the tariffs too, with the tariffs against Canadian oil and gas, that will also affect it. So assuming that even happens, I don't even know if that's going to happen. They have a month to go before that gets put into effect. So we have those issues to consider. So everything is against you on that count. Now the last thing is the earnings growth, right? We're not really sure. Like I think all these companies have pretty much said they're okay, continuing their current growth, but being very conservative about their outlooks. And I think we've seen that already. We got ARM, we already had Qualcomm, like those smartphone sales, not really gangbusters here, that the market is not willing to pay higher prices for their shares. And then I think we only have NVIDIA now, right? And Broadcom, AVGO, that's later, and Marvell. So those three semiconductors are the last big tech stocks to go. And those three all had very good earnings last quarter because of AI. Now with the whole DeepSeek and all this stuff, yeah, everyone's really, really anticipating. Like, you better give us really good numbers for your AI growth. So that's what's going to happen later in February. So let's see what NVIDIA. So NVIDIA reports the last week. So the last Wednesday of February. I think that's true. So that's the 26th, I believe. So you got the 26th for NVIDIA. Okay. So let's see. Yeah, 26th. All right. After the close. Now let's see what Broadcom is. AVGO. Broadcom. 27th. Okay, Thursday. I assume it's after the close. Marvell is Wednesday, March. Ooh, that's pretty late. Pretty late. Yeah, okay. Okay, so tomorrow we'll have unemployment data, all right? Payrolls data. Now, the interesting about payrolls data is something interesting just happened recently. So I'll play this video. Is the government trying to hide something?
Melissa, yeah, CNBC has learned that many economic data sets from census.gov are now not available to the public. Census.gov website, when you call up normal data sets like how many people live in the country, population estimates, says access to the data is, quote, forbidden. Some data experts have found a workaround for some of these data sets, including going to another website, data.census.gov, but it's not all there and not all easy to do. Data normally downloaded by economists is just not there, according to several sources we've talked to. For example, Maureen Haver at Haver Analytics, who provides data to CNBC, says, my staff tried numerous economic releases and we could not access them through census.gov. Mike Horrigan, president of the Upjohn Institute for Employment Research, says, when was the last time that Census just stopped publishing data? That just doesn't happen. It suggests that there may be internal pressures not to publish data that we rely on, and we need to figure out if that's true. It is unclear if this census data is a technical problem or part of a larger federal data purge that we've seen in things like healthcare and other areas of the government. We emailed the Census Bureau. We called them. They could not be reached for comment in the last several hours. Melissa, just very quickly, Census does provide data for the household survey that the BLS releases tomorrow. I have no indication that there will be any problem with that data tomorrow, but obviously economists are concerned about this data, and it is used widely throughout the economy. Another bit of data that's not available is tiger mapping data that's used widely in mapping programs like Google and all sorts of things. Those files are also unavailable at this time, we understand.
All right, Steve, do you know if this data is unavailable or if it has been deleted?
I do not know that. I know that when you go to access these files, it says forbidden.
Okay.
I do know that many people have archived this data, Melissa,
Yeah.
so it won't be unavailable forever. But from the government website, census.gov, it could not be accessed by us and several data experts we've worked with over the past couple hours to confirm this story.
Oh, well, yeah, forbidden. Yeah, I guess you're not going to get no more data. I don't think it's going to have any effect on tomorrow's numbers, but, well, you know. And also, you got to, later on, we'll have to take into account 40,000 people, like, willingly taking the buyout offer for the government. So a lot of jobs come from the government, too. So that will have an effect on later pieces of data this year. Who knows which way they'll manipulate it, but hey, that's good for inflation if less people are working. Bad news is good news, right? Yeah, good. Awesome. Anyway. Okay, so let's get into the earnings here. Let's see what we got. See what we got here. So Amazon, I talked about that. Let's go to Affirm. Buy now, pay later. HB is in that one. It was up about 15% after hours. Oh, very good. So let's put up a chart of that one. Put up a chart. So it's at around $70. Okay, $70. Okay, let's see. Let's see. All right. Affirm. Let's see where we're at. Okay, so it hasn't been doing anything significant this year. It's been in this range, kind of like most stocks. Touched this double bottom here on $53. Very nice. And then it's bounced up. So now if we're at 70 about, we're right at the top of this level. So if we take a weekly chart here, weekly chart, that might fix this issue because we have a green DI going down. Okay, so if you follow Joe Rabel's little techniques, yes, you want that green DI to go back up here now because it's been dropping this whole year. And if we look at a monthly chart, let's see how we are. Looks pretty constructive here from $9 to 70. Okay, so will it break out and go back up to 140, 150 this year? I don't know. Just watch. We'll have to watch. But yeah, this is a pretty important area because this is where it was around 2021 when it first IPO'd January. Ooh, yeah, that's a bad time to IPO. A lot of these companies IPO'd during the 2021, during that bubble. And this was the last COVID blow off here, right before Jerome Powell switched his mind, and then everything started going down, right? So let's see. It could be interesting. Yeah. All right. Well, let's watch this. So a lot of these stocks have done quite well. Net also reported. Net software, Cloudflare, you know that. So, pretty important for the internet. So 41 to 141. It's going to get close to 191, where it was old high back in 2021. Again, it took advantage of that COVID move up. Looks like it IPO'd in 2019. Took a little breather here, $51. Okay, let's see. I don't know. We could be at the top. We could be close to the top. So expect a lot of these stocks to try to get to their old highs, and then probably be the end. Okay, so there could be a trade there as well if you're interested. So let's see. Net is up 12% at 158. Okay, yeah, it's getting closer. So maybe what will happen is March, April, we'll see a downturn, and then you'll get in there. So maybe it'll pull back to the 120s, get back in for the next ride back up to 180, 200. See if that happens. So yeah, a lot of these software companies have reported earnings that have done well. Fortinet, cybersecurity, let's see, FTNT up 7.7%. Yes, this one has broken out of that range from 74. Okay, good. All right. So now let's see. It's at 112 right now. Okay. So it looks like it's probably new highs, huh? All right. So yeah, a lot of these stocks, $1 at 2010. Way back when. Not bad. Let's see what March 2020 was 14. It fell there. Okay. All right, let's see. I don't know. Yeah, so this one kind of is still in space. So there's not much of a chart history for these prices. So it can probably keep on climbing. 112s. And Pinterest. Look at Pinterest. PINS. Yeah, this stock has not done very well. Again, the same shape. COVID, expansion, Jerome Powell, interest rate, contraction. Now 18, go to 45 at 33, and let's see, 39. So is it time for Pinterest to bubble up? Definitely a bubble stock. I wouldn't trust this company. I think when I was in San Francisco, I walked by downtown. I see this headquarters over there. They have their headquarters over there. Yeah, probably right next to Cloudflare, actually, probably 2 blocks away from Cloudflare. Net. Ticker symbol. So, I mean, a lot of these companies, these software companies, they could do good. They could do good this year. But we got to get through the trouble times. So I think the trouble will come in March, April. Again, watch for that. So maybe you'll get a better deal later. But I wouldn't be playing this now. Up 18%, so $39. Microchip, MCHP, semiconductor. It is down 7% at 49. Yeah, okay. So this thing has been going down since May. Terrible semiconductor stock. Not good. There's not many things propping up that whole sector then, except for Nvidia. Wow. Yeah, we're stuck with Nvidia. And Nvidia has been climbing this week. I don't think there was any news except for what came out of SMCI. So if you were playing SMCI, I told you guys to get in on Monday on that dip. You would have got a pretty good deal. So if you were just playing the stock by itself, let's see. So bottom to top, 35%. So if you were playing SMCX, the 2x leverage, like I was, Here, that was about 70%, right? Perfect. Okay, so very nice. So every day I was selling little bit by little bit by little bit. I sold another chunk today. Right now, if you look at SMCI's chart, 35 will be an issue for SMCI. Once you hit there, you'll have trouble again. We hit that twice, late January 22nd, and again in January 24th. And we had a nice pump January 6th. So those were good trades over there from here to here and here. So like New Year's, essentially New Year's for 3 days. That was just from unemployment data for the 6th. So you got lucky there. And we'll have unemployment data tomorrow too. So I don't know if it's just going to pop up here. I'll just sell the rest because I probably not going to play earnings. Earnings is next week on Tuesday. I do not think I will play that. I'm done. I got my trade. I mean, you get 70% move in a week. You got to count your blessings and be like, yeah, I'm done. I'm out. I mean, I'm not going to risk earnings for this. Like, if earnings is good, it could go all the way back up here where I last sold it, December 9th, right here, $47, when I was getting in between like, 26, 24, and 17. And then when it did this, I switched over to SMCX. So I leveraged up. So I replaced all my SMCI with it. I just wrote it all the way up here with 2x leverage. Okay, so you guys, so that's where I made most of my money, like from November to December. That was like 50K or something or some shit like that. I don't know. So yeah, that added to my election year wins on top of that, and so this sucker was good. And then I started shorting micro strategies. I was just like, all right, yeah, just short here, just keep shorting it. So right now, okay. I'll bring up micro strategies. Okay, let me read the chat a little bit. Go ahead, chat GBT. If 9.9.11 is large. Okay, let's see. Let's say point. What? Okay, whatever. I don't know. I don't know what you guys talking in chat. Anyway, micro strategies. Okay. So if we look at this chart, so I played it on Monday. All right. And I have some leftovers, just in case the earnings did something. Earnings did not do anything. Micro strategies, all they did was change the name of the company. So it's not micro strategies. Now it's just strategy. All right. It's just strategy now. And now they claim they're just a Bitcoin treasury, and they had some stupid crap about AI. I have no clue what they're going to do with AI with Bitcoin, but all right, if you just say AI enough, your stock will pump, right? It didn't work. So it opened up today, and it just went down. That's it. Nothing. Absolutely nothing. And if you look at Bitcoin, yeah, same thing happened. So market opened. Okay, I put the 40-minute chart here for you guys. And then, okay, right here, market opened, stock market opened, it just went down. That's it. So like I said yesterday, Bitcoin, the way the chart is moving, didn't look bullish at all. Overnight, it tried to recover what it lost yesterday, and then at the market open, and then it just did it again. It just fell back. That's not what you want to see. So every time the market opens, fall back. Nothing. No continuation. Nothing. So the only move was during Monday. And if you were on Ripple or whatever, that was the biggest move. It was like 100% move on Ripple. But after that, nothing. Absolutely nothing. So we're still stuck in this range. All right. Very, very much so. I'm going to see what happens tomorrow with the unemployment data. That's it. That pretty much everything rides on that right now. Okay, let's see what else to say about MicroStrategy. So yeah, let me look at the chart again for you guys. So I was going to show you the daily. Yeah, okay, so look at the weekly. Look at the weekly right here. So now it's underneath the rising 18 moving average, and it's still stuck in this range. The MACD has crossed over the signal line. You see the green DI is weakening, but no strong selling yet, okay, on the weekly. But that could be coming around the corner very shortly. The daily, however, you see stronger selling here on the daily chart. So a lot of red candles here, a lot of red moves. Even though you had this green bar, it still went down, right? So it wasn't anything. There was no follow through the next several days. It went back down. We're stuck back at this 324 level on MSTR. MACD is now below 0 here. All right. So once this thing gets going, if this blue ADX line goes up, so if you follow the Joe Rabel's stuff, it's set up to go down. Everything's set up. We're below all these moving averages here on the daily, 1840. And it's rolling over too. The moving averages are rolling over. So it looks like a great shorting opportunity to me. Very much so. So I'm ready for the next short of this guy, but not yet. So let's say tomorrow does good. This thing moves up. Great. Perfect. So let's say it goes back up here, tries and fails again at 400, hits this red rectangle area again. That's it. That's where you short. All right. So look out for tomorrow. If that happens, then wait for next week. See if it gets up to 400. Yeah. Okay. I would be like going big short this time. Like just like I went big short here. I didn't do big short here. This was way too close to Christmas. I was just like, nah, I'm too greedy to do this again. But if it comes around again, yeah, you should do it. You should short this thing. All right. Okay. And you can use the MSTZ ETF to short it. All right. So MSTZ, that's 2x leverage too. So it's 2x. It'll go two times percentage wise. So watch for that. I'll tell you when it gets there. And I'll say like, yeah, okay, I shorted it. All right, whatever, fine. Let's say I'm not a big short, okay, type person, but if there's something that looks this good, yeah, I would do it. Especially when it tracks Bitcoin, you know, when Bitcoin gets in the mood. Oh yeah, yeah, it goes up and down real fast. Oh, this thing will follow. And if the Nasdaq goes down with it, even better, even better. Okay, so watch for that. Yeah, because and if we look at the hourly chart, you see this? Yeah, this is terrible. Utterly terrible. Like it has to turn around now. If it just like stays and keeps dropping like this, the hourly that means like, oh my god, like don't even bother waiting for it to go to 400 then. If this thing just rolls over, like yeah, tomorrow's going to be a big deal. Let's see what happens. Like I mean, if it just rolls over, I might just short it then tomorrow morning. So I'll come back tomorrow morning. We'll see. I don't know. If I feel like it, I'll do it. Okay. Let's see what else. Let's else. Oh, I'm going to talk about makeup. So, ELF. This is a makeup stock. ELF Beauty. Terrible earnings. It is down 23%. Let me check. ELF, 23%, I think. 24.77% at $66.65. Oh my God. Oh man. Yeah, all right. Let's see. Okay. So it's here, huh? Somewhere around here. Let's say it ends up at 65. How about that? Okay, let's see. Now gonna do this. Let's see. Okay. When was the last time it was at that area? 2023. Okay, let's see. So March 2020 it was $8, went up to 200. Not bad. Okay, that's not good then. Wow. Okay, so one of the things I like to look at is beauty supply and makeup, anything female. So a lot of times, anything that the women purchase is a leading indicator of the economy. Okay, so this is not a good trend because this week we had a bunch of other stocks like Estee Lauder or L'Oreal. Let me see what else. There was another one. Shoot, what was the other one? Crap. Was Ulta? I don't think Ulta reported. Let me see. Ulta reported some time ago. Oh, it didn't report yet? Oh, shoot. March 30, March 13th. Yeah. Okay, so Ulta's been rolling over since March 2024. Try to recover in December, probably just because of like early sales projections for Christmas. Yeah, but I doubt the March earnings will be good. So it didn't report yet. Okay, Ulta didn't report yet. Okay, let me see. So then we got L'Oreal. Okay, Estee Lauder. Estee Lauder reported this week. Yeah, so this one down 23% this week. Estee Lauder. L'Oreal is French listed company, so I have to use the pink sheet market here. So this is, yeah, it was down 4%, this 4.3%. Okay, so, and it's rolling over. Yeah, this thing made a double top here. It's rolling, so that's not a good sign. So L'Oreal's not doing good. I think they said something about China. It's always China. Estee Lauder. Yeah, Estee Lauder's been down since like the 2021. Yeah, so okay, so all these things been going down. This is bad. All right. Okay. So this isn't good. The other one you'll want to track is Lululemon. It's been trying to recover. It bounced off that 230, but it hasn't reported earnings until April 1st. We gotta wait for that one, see what happens. If this thing collapses too, then be warned. Yeah, we're on our last legs. Probably you'll see the effects of a weakening economy starting in 2026. So this will confirm everything. So usually this will lead. All right. So once you see the beauty makeup stuff lead, then they'll lead. But it could just be China stuff. Who knows? It could just be Chinese stuff. Because, well, I mean, not ELF. ELF is yeah. I doubt they sell to China. It's mostly American. So, yeah, L'Oreal definitely is Chinese. A lot of Chinese consuming that stuff. So that's gonna be has more an effect. So yeah, it depends. It depends. All right. Okay. Just keep that in mind. All right, guys. So LRLCY if you want to look at L'Oreal, EL for Estee Lauder, Ulta, right? So ULTA and ELF. You can look at all that up. Okay, that's it. That's it for earnings. I think that's all I gotta do for earnings. Pins, I covered that. Done. Affirm. Definitely I'll look at Affirm tomorrow. Good. All right, so this week I said buy DNA 2 days ago. So you got a good trade yesterday, 17% at the top. So today it went down, all right, 16%. Now, if you're wondering, should I buy back tomorrow? I don't know. All right, we have to wait for those unemployment payroll data to come out because today a lot of stocks that did good yesterday did not do good today, like ATAI, psychedelics. So this week was very great for psychedelics. So if you were ATAI, MNMD, Mind Medicine, so look those up. I was talking about it on my last stream yesterday. I covered like that these things with RFK, with Elon Musk, all getting their hands on the government. You could get a lot of rapid approval. So ATAI last week had a successful FDA a test of their DMT drug. So to me, I'm looking for the next Palantir. All right. Now, Palantir, I got in when it was like $7 to $9 back in 2022, end of 2022, 2020, and beginning of 2023. So this has been a great stock that I've been recommending on this channel for the whole summer since June. If you got in at any point between June and August, here this was the last entry, that was like 400% till now, right? So this week we had earnings, we're up 23%. Today up another 10%. I already sold a big chunk on that earnings on Tuesday. I'll sell my last bit this month. Once I see the stock market roll over, I'm out. I'm done. Bye-bye. No more Palantir for me. See ya. Yield my phone. Yeah, I think you mentioned that. You mentioned one of them, like the BTC stuff. I haven't had a chance to look at all that stuff. I kind of did, but not really. And I also believe you mentioned something about a channel about passive investing, right? There was a YouTube channel you recommended. Yeah, I forgot. Oh man. Yeah, you said something about passive investor or something like that. I have to like, if you remember, like, you can put in the chat or email me. Yeah, crack at JGHB. Yeah, because there's a lot of these new fangled ETFs that do cover call strategies and income generating strategies, stuff like that, right? So I'm not that qualified to talk about them. I'm not. Yeah. So, but yeah, if you remember which one you said, yeah, you said something about some YouTube. Let me see if I can find it here. YouTube. Let's see. Passive. Tube. Yeah, I don't think I have that, huh? Yeah, I don't think I have in my history, or I don't even know if I put in my favorites. Yeah, if you remember that CKJ3, yeah, I think you said it one time before. It was probably during the 24-hour stream. I remember that. So yeah. I see that. I see that. Yeah. You showed me one of them, that BTC one, that Bitcoin one that gave you a distribution every week or something. But yeah, if you can remember that YouTube, I think it was huge, CKJ3. You said something about your YouTube channel where they did a passive investing. Like, that's what that guy talks about mainly. Yeah, passive investor. Yeah, it was like some kind of passive income channel or something. Yeah, so if you remember that, yeah, send it to me again. Okay, and let me see what else. Okay, the Palantir, talked about that. And then, oh yeah, it's on this top of this channel. Oh yeah, notice that it's on top of the channel also, guys. So if it comes back in, it's either going to go sideways between 88 and 100, or it will just completely collapse and go straight down and overshoot back into the 71 area here. Yeah, so maybe I'll do that. I don't know yet, but yeah, watch for that. Definitely watch for that. Okay. All right. So let me see what else. Talked about that. Oh yes, TMC. I gotta talk about this one. Okay, so I'm gonna play a video first for you guys, and then we'll see what's up with this stock. Oh yeah, it was a book, The Income Factory. Are you sure? Okay, so CKJ3, are you sure you didn't recommend? Like, was there a YouTube channel that came with it? Oh, because I see. Okay, yeah. There was a YouTube video. Okay, I put it somewhere in my list here. Okay, I see it now. Yeah, so it was with the author of that book. All right. Yeah, we'll have to go over that one day. Yeah, definitely. I'll have to go over the ETFs and the stuff. So let me remind myself. So I put the link in the chat. So this one. So yeah, I haven't watched it yet. So that was on my to-do. Yes. Okay. So I'll put this in my notes. So I'll have to get back to this stuff. Yeah, because yeah, I remember all this stuff you mentioned, CKJ3. I just haven't got around to it. Yeah, I'm not a big income guy. I should be though, with the amount of money I have. I mean, I should be thinking about that. But once I got into trading, it's just like, I'm Asian, so I got to gamble. It's not fun to just do passive investing. It's boring. So I gotta scratch my inclination to gamble, right? So I gotta do that. But yeah, I definitely have to. Shit. And my parents are so lazy; they don't even bother looking this stuff up for me. So once they get enough money, they're like, we don't need to do this. All right. Yeah. So, yeah. I mean, that's kind of a weakness with my parents. They're not that greedy. So you would think like they're Asian, they should be greedy, but they're not. So okay, whatever, fine. Okay. Anyway, all right. Let me continue on. I was gonna do the mining thing, but let me go through some other stuff here. Yeah. Let's do the mining thing. Okay, let's my since I brought it up. Let's go down, jump to that one. All right.
Energy economy, it continues to accelerate, and that's what makes finding the minerals and the metals that power things like batteries even more critical. As with everything else these days, artificial intelligence is stepping up. Diana Olick has the details in her continuing series on climate startups. Diana.
Well, Brian, at face value, mining is pretty basic. First, you need to find the metals, and then you need to get them out of the ground. Historically, this has been a long and arduous process, but new technologies from a slew of companies are disrupting the mining industry, looking to cash in on powering all that clean energy. Electric cars, solar panels, hydrogen fuel cells, they all have one common denominator. They need precious metals like palladium for catalytic converters. That's why as those clean energy industries grow, companies like Cobalt Metals, Ver AI, and a startup called Earth AI are in a race to get those metals to market as soon as possible. Earth AI combines AI-powered mineral discovery software with proprietary drilling technology. Their data goes back 50 years.
We train our AI to learn from failures and successes of decades of hundreds of geologists that explored in the past.
Tess Luke says by using this mining process, they can do it at half the cost and in a fraction of the time. That's valuable potential, as annual mine revenues currently range from $50 million to $3 billion. When the system finds what it thinks are metal deposits, Earth AI can drill down to verify it in just a tennis ball-sized hole.
We drill down to 2,000 feet and grab a sample of rock that has never seen light. And the metals in that rock, they can build hundreds of millions of electric cars. They can turn our grid renewable.
Earth AI doesn't explore around existing mines, but finds new areas and then sells that information to mining companies. Their early success rate is very attractive to investors.
The market for these minerals is massive. It's in the tens of trillions of dollars. It's only going higher. There is a significant moat in their business model and the way that they've trained their large language model.
In addition to Tamarack Global, Earth AI is backed by Cantos Ventures, Y Combinator, Scrum Ventures, Alpaca, and Overmatch. Total funding so far, $38 million. Earth AI recently discovered one of the largest verified deposits of palladium in Australia using AI. Their joint venture partner is Legacy Minerals, listed on the Australian Stock Exchange. Earth AI explores on its own as well as with other
Oh, I'm muted. My bad. My bad. My bad. So, okay. So let me start again. You didn't miss much. So again, so this thing goes between $1 and $2. All right. Okay, this company, the metals company. So they do undersea mining. All right. Now, this thing was a SPAC. All right, around $10, I assume. So that's why I assume it's a SPAC. So they IPO through a SPAC in 2021. Now it's been stuck in this range, and you can see it goes below and above it quite often. It doesn't respect it, and we're at that point where like we're at the top again. Okay, so that's all I said. Nothing special. Now, do we believe that it's going to go up? I don't know. It's riding high on the fact that they think Trump is going to be very, very amenable to their work here. So let me read this thing. I think it's pretty long, this thing here. So I don't know if I'll read all of it. Well, it's not that long. All right. Let me read all of it for you guys. So okay. Let me share the screen here. So TMC is the stock ticker. And so I also said that I'm always on the lookout for a Palantir like stock, right? The next Palantir, the next Nvidia, the next whatever. And these things like MindMed, so Mind Medicine, MNMD, ATAI, TMC. Now, if you have an IRA account, right? Like you can I don't know how much you have in those accounts, but if your retirement account, you can try to load everything up on these type of risky type stocks. Like just put 10K right on this one. If it goes up 10x, you get 100K, right? And then with that, you can take it out of your retirement account when you retire, and you're good to go, right? They won't tax you. So this is kind of like when you're looking for these big gainers, like Palantir was, okay, if you went there, that was like from the beginning. Let's say Palantir was like you got in when I did, right? And then go in. So let's see. This was like 1,000% at least, right? Yes, this was 1,000%. So looking for the next one like this. Okay, so this is what you're looking for. You're looking for the future here. All right. Anyway, let me get back to the article, and then I'll get back to that. Okay, let me stop that and share that screen. So I'm always on the lookout. I gotta find more because we have to look, and I'm looking away from the tech stuff, the tech software stuff. I'm looking at some other areas. So metal mining and probably some natural gas stock that I actually saw a video of, and I played it this week. So that company looked interesting. It's $4 a share. That could be another one I might pay attention to. Could be the next Palantir. So they do natural gas in an efficient manner. So kind of like green energy using natural gas. So this was January 22nd. Interview. The metals company expects Trump to accelerate U.S. deep sea mining push. Okay. The exploitation of deep sea critical minerals is set to be prioritized under the presidency of Donald Trump, according to Craig Shesky, chief financial officer of the Metals Group. Speaking in a recent interview with S&P Global Commodity Insights ahead of Trump's inauguration, Shesky said the new administration was poised to adopt explicit policy measures aimed at strengthening U.S. deep sea mining capabilities and pushing back against China's growing influence within the International Seabed Authority, the UN-backed organization tasked with regulating ocean floor exploration and mining activities in international waters. China holds 5 of the ISA's 30 active exploration licenses, the most of any country, granting it exclusive mining rights to about 92,000 square miles of international seafloor once commercial mining regulations are eventually adopted. By comparison, U.S. companies do not hold any ISA exploration contracts, and the U.S. role within the organization is restricted to observer status, having yet to ratify the 1994 Law of the Sea Treaty. Very interesting. Shesky said support for TMC and the wider deep sea mining industry has been evident within the U.S. government for several years, with numerous lawmakers expressing alarm at China's expanding monopoly over critical minerals, supply chains, and the potential threat to U.S. national security and economic competitiveness. He noted that former President Joe Biden had refused calls from within his own party for a U.S. memorandum on deep sea mining, owing to concerns around China's deep sea mining advancements and developments within the ISA. The predominant view we've been seeing among U.S. lawmakers is that we are not going to go down that road and cede another key industry to China. All right, very nice. In December, the House of Representatives passed its annual defense funding bill, which included a provision instructing the Secretary of Defense to conduct a feasibility study on the domestic refining of nodule-derived intermediates. This followed President Biden's signing of the 2024 National Defense Authorization Act in January 2024, directing the House Armed Services Committee to submit a report on the domestic processing of seafloor polymetallic nodules. The report's findings are yet to be released, with Shesky speculating that publication is imminent. While the support for this industry has always been there, we're now seeing a willingness to put ink on paper and understand that the numbers could look like for the U.S. to participate. We expect that the Trump administration will move to prioritize this industry through the adoption of explicit financial support and policy measures that reflect the strategic and economic importance of deep sea minerals. Shesky added that U.S. action on deep sea mining is likely to be accelerated by the rise of several prominent industry advocates to key positions within the Trump administration. This includes Marco Rubio, the recently confirmed Secretary of State, as well as Trump's new National Security Advisor, Mike Waltz. Howard Lutnick and Elsie Stefanik, Trump's respective nominees for Secretary of Commerce and U.S. Ambassador to the UN, have also voiced support for deep sea mining in the past. When you look at Trump's inner circle, it features a number of prominent deep sea mining champions, he said. We know them very well, and we are excited to see what the next couple of months is going to bring in terms of explicit support for the industry. All right, so yeah, there's some more here. I'll read this. Most of the commercial interest in deep sea mining has focused on polymetallic nodules located within the Clarion-Clipperton fracture zone in the northeastern Pacific Ocean. Found across vast areas of the muddy ocean floor at depths of 4,000 to 6,000 meters, potato-sized mineral concentrations contain a dense combination of critical metals, including cobalt, copper, nickel, and manganese. Through its subsidiary, Nauru Ocean Resources, Inc., TMC is focused on the development of the Nori-D lease area located in the eastern CCZ, where the company has been surveying polymetallic nodule fields. In November, TMC announced it would apply for a deep-sea mineral exploitation permit for Nori-D on June 27th. Adding that ISA rules allows for permit applications even though the organization is yet to adopt a mining code, with the ISA still undecided on how these applications will be reviewed and decided upon. A meeting of the ISA Assembly in Kingston in March, Jamaica, will represent a pivotal moment in determining the future of deep sea mining. According to the TMC, operations at Nori-D will eventually be ramped up to produce 119,000, megaton a year of nickel, 2.8 million megaton a year of manganese, 89,000 megaton per year of copper, and 9,000 megaton per year of cobalt. Through its subsidiary, TMC also holds the exploration and commercial rights to another polymetallic nodule contract area in the CCZ, sponsored by the government of Tonga. Okay, that's the island nation, I suppose. Platts, part of the S&P Global Commodity Insights, assessed battery grade 20.5% cobalt sulfate at yuan. What the heck? All right. Okay, somebody messed up that whole thing. But anyway, you get the idea. You got the idea. Okay, so I'm looking for a new stock here. And that's been one I've been in a little bit. And I think the way it's been moving this year makes me a lot more bullish. Okay, so yes, this is one you should put in your list, TMC. And so it's been up since the low, 140%. It's a great trading stock. Every time it goes below 1, you can say, hey, I'll give it a shot, ride it up to 2. But, I wouldn't put too much money when you're just trading it. But overall, if you're thinking of a longer term situation like we see now, this could be the time where it says, nope, we're not going to go back below 2. Once we hit 2, we're going to keep on going up, 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 up. I don't know. Keep that in mind. Okay, so good. All right, let's go to the next video. I think I'm going to do Honeywell and real estate. Okay, Honeywell. So if you do Honeywell, what they're going to do is they're going to plan a 3-way split. And my long-term portfolio, I have GE. So GE split into 3 companies. GE became General Electric Aerospace, so it kept its ticker GE. So this was way back when. Way back when. So this was like even before the COVID era days. Like it was like here, when I just said whatever. I'll just buy it at this crap level here, because GE, if you see, used to be 100 something, 150 at this point in 2017, crashed all the way to $33. Just bought it, just didn't think about it, just leave it there. And then all of a sudden it split into 3 companies and it flew all the way back up. It's kind of like Intel, right? Or Boeing nowadays. Like if you're looking for a blue chip stock and you're wanting it to go up, well, you have to wait for it to crash a lot. And Honeywell, it hasn't really crashed a lot, okay? It's not really a bad stock in general. It's like GE. GE was a terrible one. And I knew it well because I used to study a lot on ultrasound. So GE did a lot of healthcare stuff, a lot of airplane stuff. It was a company that did everything. But because the corporate structure was made in a way where like they wasted a lot of money doing financing. It's kind of like maybe that's how like the US car manufacturers get into. They're more interested in financing, leasing. So they make money more on trying to do banking than actual innovation, So GE at that time, a lot of the stuff there, they weren't doing much innovation. They were spending most of their time trying to juice up their results by doing banking, essentially. So they were leasing out equipment, or it's like exactly like that. It was like just easy ways to make money. But so there was no innovation, right? So Honeywell, I don't think has that kind of problem. So its stock price is fine. It's perfectly fine. It's doing okay. So, but right now they're going to try to split into 3 companies. So this might be something you want to put in your long-term portfolio if it does that. So let's see what they say.
Out because the short-term thinkers are selling the stock of Honeywell on 2025 guidance, and what matters is the fact that they're going to split into 3 independent public companies. You don't want to miss the forest from the trees here. Honeywell CEO Vimal Kapur joins us exclusively now. Vimal, congratulations on doing what a lot of people were hoping, and you've been working with this for a while, though. We know Elliott Partners is in there pushing. Could you just please tell us the parts versus the whole, what you think?
So, Jim, I would say that we have been working on looking at what's the best future for the Honeywell. And as we did work over the last year with my team and with the board, we were convinced that there's a great future for Honeywell into 3 separate companies. Specialty chemical spin, which we announced in October, and today's announcement by which we create 2 best-in-class companies, one in automation and second in aerospace. So I'm really excited on what's ahead for Honeywell and our shareholders and our customers.
Which division do you want to be with?
I would say I will be with the company as the time progresses and let the board decide. But I can commit to you I'll be back with the, in my new role as we continue this journey.
Excellent. Now, I think that you've got a business that some people are concerned about. I'm using a comp, so to speak, of GE. We had GE Healthcare was okay. GE Aerospace, which we all knew was going to be great, and GE Vernova, which was a real wild card. Honeywell Automation may be a wild card. I know you've confessed to me that there have been some weaknesses there. What is the possibility then, when that becomes so-called laser focused, because it goes out on its own, that we'll start seeing some genuine earnings improvement?
Yeah, so look, if you look at our Q4 performance, just as an immediate gauge, what we delivered, Honeywell grew 6%, and most segments did well. Aerospace grew double-digit, building automation grew high single-digit, etc. The 2025 guide, Jim, is based upon what we have conviction in and what we see. We are not making any estimates. We are not making any judgments on how things will get better. If they do, there should be an upside to our current guide. I truly believe in the future of the automation business. We are very well positioned in each of the three segments we play. Industrial automation business has underperformed, and we have guided low single digit. Part of it is this business is more exposed to China and Europe, where the markets are soft, but also part of it is it requires some additional portfolio work. So I remain very confident that the transformation work we are doing, this business will position itself well in the times ahead. And the overall Honeywell, the Honeywell Automation in this case, is going to be a very compelling stock for our shareholders for earnings growth.
Vimal, it's David. Well, I mean, speaking of work, you've got a lot ahead of you. Obviously, you're talking about this not being completed till the back half of 2026, so there is time. But are you ready to go here? Do you have any sense in terms of capital structure for these entities? I mean, you clearly haven't even decided which one you want to run or which one you're going to run. So, it just does seem that you have a lot of work ahead of you here.
Yeah, I think, look, we can only share a few things here today. So I would say from with the work ahead perspective, I would say we do expect both Honeywell Aerospace and Honeywell Automation to be well capitalized. Investment grade, so we are very confident on that, and we'll share more details as we progress. But we are also going to do the work on strengthening each of these companies by doing the portfolio work. We continue to expect the M&A work. We have been very successful over the last last 12 months, and expect to do that work. And we are also conscious of the work ahead point which you made, and we have done the separations earlier. We have done it well. We set up a program office. We are going to do the same. And we want to make sure that the core management team is focused on running the business, and the separation office works with the external consulting companies, etc., and help us walk through this process over the next, 18 months or so, which is ahead of us.
Vimal, it was quite a few years ago, 7, 8 years ago, I remember. I think it was Third Point, an activist came at the company, sort of, saying, hey, think about breaking yourselves up. Didn't happen then. Obviously, you were not running Honeywell back then. But I'm curious, what is different about now versus a number of years ago in terms of why the board chose this as the proper route?
No, very good question. If you look at our last 7 to 8 years, Honeywell added a great value in its businesses through its operating system. Our ability to have robust operating system, supply chain transformation, commercial excellence, and we added a lot of margin expansion and growth across all our businesses. When I started my role about 18 months back, the first thing I did was simplified Honeywell into 3 teams, aviation, automation, and energy. But one thing I realized was, as we started assuming my CEO role more deeply, that there's a more and more divergence between aerospace priorities and rest of Honeywell priorities. Aerospace really has to focus upon supply chain recovery, capacity expansion, going towards electrification, while automation business have to really think about digital transformation, adoption of AI, energy security. And therefore, it was imperative that separation creates a potential of growth opportunities with a focused capital structure, focused management team, focused board. And that was the really driver for us that 2025 is different from 2017. And therefore, we feel very confident of the decision we have made today.
It makes so much sense now. Vimal, you own a company called Quantinuum. I'm not a fan of some of this stock market. Some of the stock market just presumes that everything goes right. We'll put men on the moon for $8 stock. We'll have a company that does quantum computing, and suddenly it's worth $4 billion. It was worth $40 million a few weeks ago. Quantinuum's a real company. I know you're going to do something with it. Why not just sell it for $25 billion to the public? Because the public is unfortunately ill-advised in what it does when it comes to quantum computing.
I would love to monetize our stake in Quantinuum as early as possible. The good news, Jim, is that we are making all the technical progress we have committed. We are hitting all the milestones. We recently announced partnership with SoftBank in the same journey of continuing improving our commercial partnership. We did a fundraise about a year back, pre-money, and we were valued at $5 billion. That was almost a year back. We are going to do again, more money raise, in next few months. The businesses or market is really not ready for IPO. Market needs more evidence of commercial success. We will demonstrate that. And I'm committed that, we will monetize the value of Quantinuum for Honeywell shareholders. Earlier, the better. And we are working feverishly towards that goal.
No, I hate to say it, but that could end up being worth more than aerospace in a market that is at times as stupid as it is right now. But you're not. You did what people should be doing. I think this is going to be GE number 2, and I want to thank you so much to Vimal Kapoor for a really good. You really laid it out in a way that I think many people understand it. So thank you very much.
All right, so this is GE Healthcare. When it split off, it went from pretty much $58 to $90. Not bad, but the real winner was GE Vernova. So this thing, when it split, went from $116 to nearly $440. Yeah, so it split off at the right time with the nuclear craze. So once that whole nuclear energy stuff started happening, it was just like, yeah, it did at the right moment at the right time. I don't know if Honeywell can complete it at the right time, right moment for it to make sense to get in that one, because the stock itself, Honeywell, isn't like cheap, right, compared to what GE was back in the day. But it hasn't been doing well since COVID because it's been mostly going sideways. So I get it. When you're a CEO, the shareholders are going to get more pissed that, hey, come on, look at your stock. It's gone nowhere since COVID. Like, at least like something like Carvana has gone up like 6,000%. Like, hey, why aren't you doing this? Oh, Carvana, man. Carvana is like one of those stocks that's like insane, right? So, and then like they were talking about quantum computing too. So yeah, so there's a lot of things that could happen when you split a company and have 3 separate stock listings. So that's the thing. All right, let's see what else I got to mention before I forget. Coherent had earnings yesterday after the close, and it was up 15%. Let's see how it did today. I think today it pulled back a bit, right? So yeah, it was up to 16, 17, 18%. It pulled back to 10%. I think, yeah. So 11.5% was at the end of close. And I said to trade AAOI. So if Coherent did well, AAOI would follow it. So let's see. Yeah, so in the morning, it went up a bit and then came back down. That's when I bought $28.80 or something, closed at 30. If tomorrow goes well, I'll buy more, but this is just for a trade. AAOI is not Coherent. It's not COHR. COHR is owned by Stanley Druckenmiller. He owns a ton of shares of it. Coherent is actually a very good optoelectronic company. AAOI is a trash company. So the last time I played this was here around 2017. Okay, I didn't go down here. I didn't buy it at 8. I bought it at like 26. It went up to like 90 something. I got out, and then look at that. Look at that. It just made a peak and it just went right down back to 20, 24 or something. That's it. So this is not a stock I would buy and hold. This company is garbage. It only has one customer at a time. So back then it had Facebook as a customer. That's why it went from $8 to 90. This time around, it has a different customer, but same problem. It just has one customer. And once that one customer stops buying their stuff, guess what? It goes back to the same old story because their business is mainly in cable boxes, like very, very boring type business. And then once they get a data center type customer, they blow up because that data center is expanding. So this is kind of a leading indicator too. So in 2023, we got this huge pump. That's how you know like the AI stuff was going to happen this year, because they were expanding at all fronts to make room for AI. So once that AI spend is over, once people stop spending on AI, this thing will just roll over again. But you can still trade it. So at least we can get to 44 again, maybe this month. And then after we get through March and April, let's see if we can get to 90. I'm not sure if that's going to even happen, but it could, right? So this thing went from $1.78 to 24 in a year. Hey, and this thing went again from $6-7 to 40 in a year, half a year, basically. So it's very good for trading, but I wouldn't put much money into it. So if you're a trader, yeah, it touched that 24 area, very important area. I think I could trade it up to 40. Go for that. So I'm just telling you guys this because if Coherent is doing okay, I'm hoping AOI at least can ride it for a while. AOI won't report earnings until 26th. So you got a whole month. So if this whole month is going to be good, then we can ride it. If tomorrow is bad, forget it. Don't bother. Okay? So just letting you guys know that's a trade opportunity. Okay. Let's see. I'm going to do real estate and then I'll do MicroStrategies. Actually, let me do MicroStrategies first. So and then I'll play the video, the last one about real estate. That's it. That'll be it for today. So let me get to that article here. So this one's that. So this is not an article. This is a press release. And I'll go to the website so you guys can check it out. Okay. So MicroStrategies, micro sailors, little company that just buys Bitcoin. Everyone thinks it's a scam, right? So it's a pyramid scheme. I played one video talking about it's a pyramid scheme. The guy explains how the way they set up the company to buy Bitcoin is a pyramid scheme. Okay, you can watch that video if I can find it. Let me see. Since I remember it now. Let's see, pyramid scheme. MicroStrategy is a pyramid scheme. Let's see. Okay, yeah, I played this video. It's by Mark Meldrum, Meldrum. Okay, so I'm gonna put the link in there. Chat. Let me see. Okay, let me make sure I got the right link. Okay, let's see. Okay. All right, got the right link. All right. So I played this maybe a month ago. So you can watch this yourself. So this one here, this YouTube link here, this one, they'll talk about it's a pyramid scheme. It's a pyramid scheme. So he goes through all the math and shows you why it's a pyramid scheme. Okay, so it's this one. It's got a lot of math in it. This guy is great. He does he breaks it down so well. So yeah. So Mark Meldrum, this channel. So subscribe to this guy. Okay. Yeah. But anyway, I don't care if it's a pyramid scheme. Stock is a stock. I'll do what I can to make money. All right. So if it goes up, it'll go up. If it goes down, I'll short it. Anyway, strategy. They changed their name. Strategy announces fourth quarter 2024 financial results, holds 471,107 Bitcoin. Okay, so let's go here. Let's see. Okay, oh man, MicroStrategy Incorporated, DBA. What does that mean? Strategy. Now they changed it to strategy. Trademark. They trademarked the word strategy. Ticker MSTR on NASDAQ. The largest corporate holder of Bitcoin and the world's first Bitcoin treasury company today announced financial results for the 3-month period ending in December 31st, 2024. Earlier today, we announced that we are now Strategy, a new name that powerfully and succinctly conveys the universal and global appeal of our company. Strategy is at the cutting edge of innovation, championing the two most transformative technologies of the 21st century, Bitcoin and AI. We have completed $20 billion of our $42 billion capital plan, significantly ahead of our initial timelines, while leading the digital transformation of capital in the financial markets. Looking ahead to the rest of 2025, we are well positioned to further enhance shareholder value by leveraging the strong support from international and retail investors for our strategic plan, said Phong Le. Vietnamese guy, President and Chief Executive Officer. So, I don't know. That sounds like whatever. See, but the important thing is like they just changed up their whole website. So let's go to let's see their website. Hold on. Let me get the link here. I'm not gonna read all this stuff here. Blah 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 blah. I don't care about fundamentals. Okay, so see their new website now. It's all has a nice color here. Got the Halloween theme. All right. Like all it does is show us Bitcoin. What exactly does this company do anymore? It's just Bitcoin. So, all right. Yeah, dude, bro. So this does nothing except do Bitcoin. Where does the AI come into this? Have no clue. I have no clue. But all right. So yeah, so they're issuing debt. They have preferred shares now too. So not only they have common shares, they have preferred shares. So Class A and Class B shares. So they got their bonds and they're using all the money that they get to buy more Bitcoin. Okay. Wow. All right. This is where they bought it. Bought here. Yeah, they just buy it anytime. Doesn't matter. They'll keep buying. So check it out. Very interesting. This could either be the greatest thing of all time or the worst thing of all time. I have no clue yet, but I would say that Bitcoin and MicroStrategies are now tied at the hip. All right. So very good. I think this gives a lot of opportunities for trading this stock, as I've alluded to earlier in this presentation. So yeah. Now I'll play this last video. We're going to talk about real estate from the horse's mouth. Blackstone.
What does that mean for the real estate sector as investors look to deploy billions in dry powder that's been on the sidelines? Well, joining me right now, right here on set, is Kathleen McCarthy. She is the global co-head of real estate at Blackstone. And it is great to have you back here. Welcome.
So good to be here. Thanks, Morgan.
So let's start right there because it has been a fascinating dynamic to see rates, particularly at the longer end, move higher since the Fed began cutting. We know the Trump administration is focused on the 10-year, maybe more so than the federal funds rate. What does it take to bring that down? And if it doesn't come down right away, what does that mean for real estate?
Well, real estate's on a road to recovery. And I think you and I have been talking about this for, it feels like a year now, because really we started to pick up those pillars of recovery coming into place when we started seeing the short end of the curve come down and then additionally spreads coming in. And that's been happening because more capital is coming back to the real estate space. So in 2024, CMBS issuance was 3 times what it was the prior year. We're now seeing really banks get back and much more active as they've seen repayment activity and they want to be participating in this market with their big clients. And I think very importantly also, you've seen a sharp fall off in new supply. So you have this combination of things where our borrowing costs are down nearly 40% year over year because of that combination of spreads and rates. And then additionally, we're seeing in logistics, our highest conviction theme, new supply down 75% or more, housing down 60%. So that really paves the way to cash flow growth. As far as the 10-year, I mean, the way I think about it is like this road to recovery was never promised to be smooth, right? There are going to be some bumps. That's an example of that. But I think you can continue to have great performance in real estate in a higher rate environment, provided that you have cash flow growth. And that's where we're really focused, is making sure we're in the asset classes and positioned to benefit from kind of this change in the supply-demand dynamic.
I want to get into some of the specific sectors you're focused on, but first, just one more macro question for you. We've seen gold on this record run, in part because of maybe fiscal uncertainty, trade and tariffs have been brought up, the possibility of inflation being stickier than expected. Real estate has long been seen as a hedge against macro uncertainty and inflation, too. So does this environment actually create more demand?
Well, we definitely want to be in the asset classes where you have shorter lease terms or leases that really allow you to capture inflation. But I'd say as it relates to inflation, when we look across our portfolio, not just Blackstone Real Estate's $600 billion of assets, but really the entire Blackstone ecosystem where we have 250 companies, what we see is inflation very much coming under control. And we look at the rate of wage growth, we look at job openings, input costs, importantly, kind of increases in rent in our housing portfolio. And it would really actually suggest that kind of the environment is conducive to rates coming down. We anticipate we will be in a higher rate environment. But I think, again, like we see sort of signs that inflation is really in a controlled place.
It's interesting because you and I have had conversations about office. We know it's been pretty hard hit in the last couple of years coming out of the pandemic. There have been reports that Blackstone might be dipping its toe back in a bigger way into some office real estate, perhaps in Manhattan. Is that happening? And if so, what is attractive about it now?
Well, certainly we've seen so many companies coming back to the office. I'd say my commute every day with my girls also would suggest that's happening. But what we're seeing is that for select assets and select submarkets, you're seeing really a strengthening in the market. And probably the best example of that is where I work. We're in the Park Avenue corridor. Blackstone itself extended and expanded its lease. And what you've seen is that vacancy has come down into the mid-single digits in that corridor. And we're starting to have, again, the footing for rent growth. And so what that will start to do is really fill up other parts of the market as well. And so I think we're seeing that tenants in the market in New York City for very large blocks of new high quality space are starting to have trouble finding kind of the assets they want. But for us, our focus is really, especially in office where there is obsolescence risk in certain assets, we're going to focus on the highest quality, newest assets we can find. We want those assets where tenants want to be. We want to really just follow that demand. And then, and of course, that's going to be an amenitized building, newer building in a great spot.
Class A, Class AA, those terms I've been hearing.
Exactly.
Retail, you like that right now, too?
Yeah, I mean, we ended the year, I guess, with a bang. We took private a company called ROIC, a $4 billion transaction. And this is following over a decade of real caution around the retail space. But you have to understand what ROIC owns. It's the grocery anchored shopping center. So one of the things that's proven super resilient is the fact that we all go to our grocery store, we go get an ice cream, we get our nails done, we go to the gym. And what's happened over the last 15 years among all the negativity around retail is that there hasn't been much of that built at all. And so, as I mentioned, tying this through to cash flow growth, buying assets that have proven resilient. These assets are focused in the highest density population centers of the country. They're not making more of that. And so we really feel very well positioned in that particular part of the retail market.
You've made big bets over the last couple of years on data centers and AI related infrastructure. They've been you were very early to the game, and it's certainly a game that seems to be paying off. Do you feel right-sized with that part of the portfolio, or do you continue to invest there, especially given some of the concerns we've seen that we've peaked in spending and that maybe costs for things like LLMs are coming down?
Well, yeah, we were, I guess you could say, an early adopter. In 2021, we took private a company called QTS and BREIT, and we've grown that company 8 times when you look at its leased footprint. And today, Blackstone has $80 billion of data centers, a pipeline of $120 billion. And I think what we know from all of our kind of insights into the market, our ability to be in direct conversation with the biggest technology users, is that the demand for digital infrastructure, these places and the power to produce computations, it continues with great strength. And DeepSeek is certainly something to really focus on. But I think what it really has done is evidenced how the cost of the compute, the efficiency, was always going to come down over time. And we anticipate that. When we build a data center, it's fully pre-leased for 15 or 20 years to a high credit tenant. We build it in a way that's flexible for the type of technology, type of computation happening in it. And we just continue to see how all of the tenants we talk to really continue to see demand for their business and therefore demand for the assets that we have.
Tenants. So their tenants are digital bits, zeros and ones. See, that's a lot. That model is a lot better than renting in the hood, right? That John Galt does. So one of these days we gotta go to Texas, buy up a bunch of properties next to the Texas Stock Exchange in Dallas, and then you put a bunch of data centers right by there. That's where the future is going to be. Try to get good location at specific areas to build data centers, and yeah, that's where the money's at. Now, since you mentioned data centers, I'll have to bring up this. So, Blackstone spun off BlackRock. So BlackRock is a spinoff of Blackstone. Blackstone was the parent, okay? And Blackstone was an early adopter of data centers because they created something called Aladdin, something that could model everything around the world so that they could invest wisely. All right, so this is an old article in 2013, so December 2013 in The Economist. The monolith and the markets. So I'll read a little bit of this. This is quite a long article. Getting $15 trillion in assets onto a single risk management system is a huge achievement. Is it also a worrying one? East Wenatchee, East Wenatchee in Washington State is known for its apples. Yeah, a lot of Washington apples, Not for its financial services, but in a data center nestled between the orchards and hills, a cluster of 6,000 computers oversees the assets of over 170 pension funds, banks, endowments, insurance companies, and others. Whirring around the clock, the machines look at what interest rate changes or bank collapses or natural disasters could mean for trillions of dollars of assets. Around the world, 17,000 traders have the computer assessments of these risks at their fingertips when they buy or sell assets. The data center forms the heart of BlackRock, an asset management company that is the world's biggest investor. Founded in 1988, it has $4.1 trillion in assets under management, AUM, making it bigger than any bank, insurance company, government fund, or rival asset management firm. It single-handedly manages almost as much money as all the world's private equity and hedge funds. Though its holdings are mostly equities, it is the biggest shareholder in half the world's 30 largest companies. It also holds bonds, commodities, hedge funds, property, and just about anything anyone would ever want to invest in. But Aladdin, the risk management platform that occupies all those computers in the orchards, is not just used to look after BlackRock's $4 trillion. The firm makes its facilities available in whole or in part to managers looking after $11 trillion more, a tally that has recently been growing by about $1 trillion a year. All told, Aladdin keeps its eye on almost 7% of the world's $225 trillion of financial assets. This is unprecedented, and it means flaws in the system could matter to more than just BlackRock, its investors, and its customers. If that much money is being managed by people who all think with the same tools, it may be managed by people all predisposed to the same mistakes. All right, that's a good intro. You can read the rest of it. Here, I'll give you the link. So I archived it, so you don't need a subscription, okay? This was archived way back when. So there, you can go here. The link's there. So you go to archive.is/D2F capital FV. All right, there you go. So you can read that yourself. Oh yeah, I read that a long time ago. But yeah, BlackRock, Blackstone, all that stuff. Yes, great things. Yeah. So this was yeah, all part of the same company at one point. So yeah, they split off. So just telling you guys. Now let's go on. Last thing I'll mention today. So this morning I was at doing a little meeting, a little seminar to learn the mark indicators. So I'm gonna show you a little bit here. So yesterday I said hymns. Hymns was gonna be a top. Now, you could just use the candles and look at the chart and you could tell like, hey, it was up 4% yesterday in the morning. It came back down to 1%. It probably is a top. But the real reason I kind of said, hey, it's the top of hymns, right? I said, well, it's because of this. And let me share it for you guys. So you're going to learn some DeMark here. I mean, I don't know much about it myself. I'm just learning. So, but the more I learn, it'll be better for me to give you where the tops and bottoms are. And so when you're trading, this is going to get more and more important. So the DeMark indicators made by Tom DeMark, you have the 9s. I played a video of his, an old school video in the 70s, 80s, him explaining the 9s, and you have these 13s. And all these are countdowns and stuff like that. But what you need to understand is that he created all this system. It's like Rain Man, okay? Like only he can fully understand it. And the thing is like when people use these indicators, they don't really know what's going on. So there's very few people I trust that talk about these indicators, like Tom Bensignor, okay? I think his name is Tom. It's not Tom. I guess it's not Tom. Hold on. Let me see. What is his first name? Because Tom DeMark, I must have confused it. Rick Bensignor. Okay, Rick Bensignor. So I played a couple of his videos, probably back in October and November, and I'll probably go through his old catalog and try to clip out stuff here and there, and then make it into a string of informative videos. So I'll just strip out all the unimportant stuff and try to make some collection there of his videos for you in a way that makes sense. But he uses this Tom DeMark indicator, and I've heard of it, and I only took it seriously when I saw someone use it correctly. Because most people would be like, oh, it's a 9. It's a 9. I see a 9. That means it's going to go down or do something. No. So once you have all this set up correctly, and each of these settings gets very detailed, like you can change everything up. If you're a real expert, you could just adjust everything here to your own specifications. And I don't think I'm autistic enough to do that right now. Okay. But if you see here, there's this red line. So the D wave projection is 44.83. What's a D wave? D wave. So if you know about what do they call that thing? Oh man, let me see. What do they call that? They have the wave counts, So it's Elliott wave. Yeah, that's what it's called, Elliott wave. So what he did was Tom made it not subjective. A lot of that Elliott wave stuff is like horoscope type things. It's just, dude, it's so subjective. But he made it systematic. And the thing is once you got this D wave set up here, it said like from this bottom made back in November 18th for hymns, it said like it's going to go up to 45. Guess what happened yesterday? It nearly got to 45. And then I had this C5 come in. So once I see that C5 and then I see this 13, And this thing is a 78-minute chart. So the reason I did 78 minutes is because from open to close on the NYSE, okay, I divided to 5 equal bars. So I said 78 minutes. So that, don't ask me why I decided to use 78 minutes. And I see this. I could have used 65 to give me 6 bars, but I said 5 bars makes sense. All right, I'll use 5. 45 here, pretty much, right? It almost got to 45. I got 13 count after a bunch of 9s. And I said, that's probably the top. So it's probably going to go back down to 38. Now, if it goes back down here, I'll buy HIMS again. So now you get it, right? So we are at the point where I think we need to have more precise levels to buy and sell. So this will be on top of what I'm already doing with the charts. But I'm only going to teach you the chart stuff because it's well understood, and you should just stick to the most basic things. And that's why I only show you most of the time 18 moving average, 40 moving average, because I don't want to confuse you with all this crap. Once you get so far into the weeds, you'll get it'll be like analysis paralysis. That's what they call it. Like, people just use technical analysis just because they just want bias confirmation. They just want to look for anything that confirms their bias, or they're looking at all these different indicators and they just start like having conflicting messages. Okay, so for the most part, you just need to follow the moving average and resistance and support levels. All right. And then once we go there, you go to the multi-time frame. Okay. And then from there, we can add on more with the Joe Rabel stuff. And then after that, we can go even further. Right. And then CKJ3, he uses ICT, inner circle traders, like to read candlesticks. And then you have the Wyckoff stuff. Okay. That I introduced. I don't think you need to go too far from those basic concepts, but the DeMark stuff, I think, takes you to that next level. And the reason why is because not many people use it. And even if they use it, they don't know what they're doing. So they're using it improperly. If you're using something that people rarely ever use, you have an edge on someone. Okay. So I think it's worth my time to learn this. So once I understand this fully, in a way, well, I'm not ever going to understand fully, but at a sufficient level, like far from being a beginner, this will be very good later on into like 2026. So that's my work for this year, is to learn this stuff. Once I learn this stuff, I can give you guys an edge. So when I do my blogs on my Substack or whatever, I'll be doing this stuff work, right? And I'll do it for free, at least at the beginning. If I get really good at it, I might start charging people, right, for doing all this autistic Rain Man stuff on this thing, because this type of work is going to be crazy. But yes, that's the future. So I'm giving you a sneak preview. So yesterday, you can go to the last video, and I said, hey, HIMS, it looks like a top. But I didn't tell you exactly why I thought it was going to be a top. But this was the real reason I thought it was a top, because of these DeMark indicators. So watch out for that. Okay, guys. So that's the pay. That's your payment. All right, for suffering through all these streams that we do on this channel. All right. Okay, guys. I'll see you around. Remember to like and subscribe, and pay Portia. You know, this ain't cheap. We gotta pay rent around here. This is quite overpriced. We're getting gouged with the StreamYard stuff and Streamlabs and who knows what else. So please pay Portia. And I'll see you guys tomorrow morning when 8:30 Eastern. Okay, 8:30 Eastern. So I'll try and be here at 8 so that we can see what's going on. But I probably won't start the stream until a little bit after 8:30, but I'll try to be here at 8 to set up the stream and all that. Okay, because it's going to be a big day tomorrow. All right, so like and subscribe. 1.26 thousand subs. And yeah, Portia, remember, PayPal is PORSHA@jghb.info. And Cash App is $PORSHAJAYE. And we will have emails, so you can email me questions at crack, CRACK, @jghb.info. All right, guys. I'll see ya later.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.